Look, quick question. What if I told you some of the highest performing investments over the last 10 years weren't stocks, not Bitcoin, not Nvidia, not real estate? I'm talking about weird stuff. Stuff most people completely ignore, while quietly making insane returns for the people who understand scarcity. And today, we're breaking down three unusual assets that have historically delivered over 20% annual returns in certain periods, and why rich people pay attention to markets nobody else takes seriously. My name is Henry, and I spend way too much time thinking about how wealth is really built outside the obvious paths. If you want to learn how money actually moves in the real world, hit subscribe, because this is exactly what we talk about here. Let's start with number 3. Number 3, rare Lego sets. Yeah, Lego. Sounds ridiculous, right? Except here's the crazy part. Some retired Lego sets have outperformed the stock market for years. And when you think about it, it actually makes perfect sense. Here's what creates value: limited production, nostalgia, collectors, and discontinued supply. Once a set retires, nobody can buy it from stores anymore. But demand often keeps growing, especially for Star Wars sets, Harry Potter collections, large collector editions. Now here's where it gets interesting. A lot of people buy Lego emotionally. Collectors don't care about fair price. They care about completing collections. And emotional buyers are extremely profitable markets. Some rare sets that originally sold for $200 to $300 later exploded to over $1,500. That's not normal consumer behavior. That's scarcity economics. But obviously, not every Lego set becomes valuable. Most don't. Which is why this is closer to collectible investing than traditional investing. Still, it's hard to ignore an asset class that sometimes beats stocks. Number 2, domain names. Now this one is fascinating, because domain names are basically digital real estate. And some people made fortunes buying simple internet names early. Think about this. If you own a short name, an easy word, or a valuable business phrase, that domain can become incredibly valuable later. Why? Because businesses want attention. And attention online starts with discoverability. A premium domain instantly looks more trustworthy and memorable. Now, obviously, most domains are worthless, but strong domains, they can appreciate massively. Some investors bought domains for a few $100s and later sold them for 6 or 7 figures. And here's what most people don't realize. The internet keeps growing, which means good digital locations become more scarce over time. Just like physical land. Except digital land has almost no maintenance costs. This is why companies spend millions securing premium names. Because online attention is money. Which brings us to number 1. Number 1, small online businesses. This is the one almost nobody talks about enough. Because small online businesses can generate returns that absolutely destroy traditional investing. I'm talking about things like niche websites, YouTube channels, newsletters, digital products, small e-commerce stores. Here's why this matters. A stock might return 8%, 10%, maybe 15% annually if you're lucky. But a successful online business, it can double, triple, or 10 times. Because unlike stocks, you can directly influence the outcome. You can improve marketing products, pricing automation, audience growth. And here's the craziest part. Many small online businesses are still massively undervalued. Some people buy websites making $2,000 per month and recover their investment in just 2 or 3 years. After that, the cash flow is profit. Now obviously, this takes work. This is not passive investing, but financially, the upside is insane. And this is where the biggest mindset shift happens. Most people only think about investing as buying assets, but wealthy people often focus on building or acquiring cash flow systems. That's a completely different game. So here's the real takeaway. The highest return assets are usually misunderstood, illiquid, niche, or ignored by average people. Because once everyone understands an opportunity, the easy money is usually gone. Now, does this mean you should put your life savings into Lego or domain names? Probably not. But it does show something important. There are massive opportunities outside traditional investing if you understand scarcity, demand, and human psychology. Because at the end of the day, wealth isn't just about working harder. It's about owning things that become more valuable over time. If this video changed the way you think about investing, hit like and subscribe. I break this stuff down every week in a way that actually makes sense. And yeah, sometimes the best investments are the ones that sound weird at first.